very special chat. In fact, I was looking forward to this chat at the CFA, 9th CFA conference in Mumbai. Morgan Housel, first time visiting in India. Of course, he's been on Metro years back from Chicago, but this is the first time he's visiting India to be a speaker at the CFA conference. And from the sidelines of that, before we have a detailed chat, I managed to get hold of him for a quick chat for our viewers on ET Markets. Morgan, of course, works for Collaborative Fund in Chicago. Morgan, welcome to Mumbai, and thanks very much for chatting with us.
Thanks for having me.
How are you feeling to be in Mumbai for the first time? What do you know about India in terms of, do you know about the investing landscape here? Are you in touch? Do you have friends in the investing community over here?
Well, to be honest, I haven't spent that much time studying in the investment market. So it's great to be here just to learn about it. It's such an important part of the global economy. That's great to be here and just learn more about it.
Right. So a lot of people on Twitter and LinkedIn follow your readings, and they make wonderful insights for us. Let's talk about one of the articles which really found a lot of favor among the investing community in the investing world is that getting rich versus staying rich. You have done some considerable amount of work. In our ecosystem, there's a significant amount of emphasis on making money, returns, getting rich, finding multi-bagger stocks, and amassing wealth. Very little is actually spoken about how to retain that wealth and compound it. What are your thoughts over there?
There's certainly skills that are kind of black and white, the opposite of each other. That really that almost conflict with each other. And getting rich versus staying rich is one of those. In terms of the behavioral traits that you need to get rich, which is the willingness to take a lot of risk, kind of swing for the fences, look for big opportunity that others are seeing. That's one skill set. But then to stay rich after you've made that money requires often pessimism, a degree of conservatism, room for error, margin of safety. It requires, a totally different mindset, a different personality. And those conflicting, it can be a problem for a lot of successful investors who make a lot of money. And then in the process of making a lot of money, it increases their confidence to a degree that they want to double down on what they did before, which entails taking more risk and more opportunity, or more, a greater potential that they're going to lose what they made in the past. Mm-hmm. So if you look at people who have gotten rich and stayed rich over time, Warren Buffett, George Soros, it's that conflicting personality and the intersection of those two. They've really mastered both ends of that equation, which is a very rare skill set.
So, talk to us a little about what are the other traits of very successful investors. You have studied many of them globally. What makes them stand out and be successful consistently? Because we've seen sparks of brilliance in many investors in our own market also. 2, 3, 4 years, massive outperformance, and then they fade away. And there is another set which consistently outperform the market and their fund over a longer period of time.
Well, I would take a slightly different approach, and I'd say a lot of the greatest investors who've done well over a long period of time have had big periods, sometimes lasting years or even a decade, where their performance was not good at all. And I think one of the traits of successful investors over time is that they're not afraid to look wrong for long periods of time and look foolish for a long period of time, which is very difficult to do because everyone wants consistent, steady outperformance. But even you have people like Berkshire Hathaway and Warren Buffett that have gone through years of poor performance where their returns were not great at all. There was a great study that I remember looking at of the top 3 mutual funds over the last 40 years. And all 3 of those funds that ended up with the highest returns and massively outperformed the market went through huge stretches of time where they underperformed their benchmark. Mm-hmm. That was the common denominator between the 3 funds. So I think one of the most important characteristics is the ability and the willingness to look wrong for a long period of time.
So how should investors cope with this underperformance? Because a lot of investors come under pressure, peer pressure, industry pressure, and then perhaps start taking hasty decisions or not prudent decisions. Because there is a lot of pressure. So how can investors cope with pressures of underperformance and still stick around with their conviction?
I think that's the hardest part in investing, is trying to convince your investors that a period of underperformance is just going to be temporary. Even if it can last for a couple of years, that there's something that there's light at the end of the tunnel. And I think if there is a big way to do that, it's focusing on a greater sense of explaining what you're doing and why you're doing it to with your investors. So just focusing on more open communication with them. There are a lot of investors who think they can just do their investing and let the returns speak for themselves, and that's it. People will just flock to them and give them money. But I think you really have to think that investing is a leap of faith for the investors who are betting on you. And to maintain that trust and that faith, they're going to have a lot of open and honest, direct talks and different forms of communication with them.
Mm-hmm. What are your thoughts on some of the practice or habits, some of the habits of successful investors? What makes people great investors? Because a lot of our viewers right now are budding investors themselves. How can they hone their investing skills if you have some lessons?
I think some common traits that of great investors is they read a lot, and they read from a tremendous variety of topics. They're not just reading about investing. They're not just reading about finance. They're reading about history and politics and military history and psychology and sociology. They're just trying to get a better sense of how people make decisions and how people think about risk, how people think about opportunity and uncertainty. And so they're very much multidisciplinary thinkers. And they're also not afraid to change their mind. So in the process of learning about how people make decisions, they're not afraid to say, I used to believe this, but now I've learned something different, and maybe it's more complicated, or maybe what I used to believe is totally wrong. So just a combination of reading as much as you can, learning as much as you can as a lifetime learner, and also not being afraid to change your mind.
Mm-hmm. Whenever we talk of wealth, there has to be an angle of inequality which has come through in the world. But at the same time, there is a section of people who actually focus on the positives, saying, what is that 1% of the world do differently than the rest, which is also plays a very large part for them to amass that amount of wealth? Why Jeff Bezos was different as an entrepreneur, as a business, than others, and similar kind of talk. What are your thoughts? Do you think they do some stuff very different which the rest don't?
Well, certainly, I think almost by definition they've done something different, and it's very different depending on what field it's in. Whether it's Jeff Bezos in retail, or Warren Buffett in investing, or Bill Gates with software, they're all doing something different. I think if there's any common denominator, it's again the ability to look foolish and to do something different. And when you start out doing something different, people are going to look at you and say, why are you doing this? This is not the way it's done. You're supposed to do it this way, not that way. So I think having that ability to do something different. But a bigger point that you and I were talking about earlier, I think, is the degree to which any extreme outcome has a degree of luck involved in it. Not all luck. That's the wrong way to phrase it. But we often underestimate when we're studying very successful people that degree of luck. The successful person underestimates the degree of luck in their success. Mm-hmm. And also us from the outside trying to say, what did they do and what can we learn from that? I think systematically underestimate the role of luck that's involved in it.
Buffett always says that investing is simple, but it's not easy. So, to our viewers, what is some of the advice you would like to give them, which help them to navigate through this difficult path of investing in the long journey of investing?
I think just realizing that investing is a personal endeavor, and what works for one person is not going to work for another. And then so you really just need to understand and be introspective about yourself and say, what are my goals? What is my risk tolerance? What do I want in life? What do I want to go to bed at night thinking about my investments? Do I want to maximize for sleeping well, or do I want to maximize for alpha? Those are two different things. And just getting to know yourself and your own goals rather than looking at investing as a stock approach off the shelf in terms of this is what you're supposed to do. You're supposed to do A, B, and C. Is saying, well, what works for me and what do I want out of investing? I think that's probably the most important part of investing.
I also see that you engage a lot with your followers. I'm sure you must be receiving a lot of emails as well. Talk to us, some flavor of what exactly are you probed most about? What are the kind of queries you get from investing followers across the world?
I think most people would want to know what are some recommendations that you have about what can I read, or what blog should I read, what book should I read in order to get smarter about investing. That's probably the most common email that I get. And most of my answers for that is read what interests you, because that's where you're going to learn the most. If I recommend a book that was fascinating for me, but it's boring for you, you're not going to learn anything from it. So I definitely implore people to read as much as they can, but read whatever's interesting to you.
All right, Morgan, thank you so much for your time. And we Indians actually hope to look forward more of you in conferences in India from here on. Let this not be the first and the last visit here.
I hope not. Thanks very much.
Thank you so much.
Thank you. Yeah.